kick things off this week looking at a small pharma company with great potential called AQST Therapeutics. And this is on the back of a request I got. Now the ticker is AQST. If we dive into the technicals and have a look at the daily chart, we can see AQST has had a change in trend with a lower high made in October. This was then followed up with a break above the 200-day at the end of October. And that really was the catalyst for an explosive move higher in the last few weeks. AQST is a small pharma company with a market cap of around just over $220 million. So with that comes risks. However, it did report its most recent earnings on the 2nd of November that beat analysts' expectations, as you can see here. Now, if we step back and have a look at the longer term time horizon, we can see the movement in price has been driven by their key drug, Libervant, which is aimed at reducing and controlling bouts of increased seizure activity in both adults and children that suffer from epilepsy. Now, I took this slide from their earnings report, and you can see here the key date for AQST and its shareholders is the 23rd of December, because this is where the company will find out whether the drug is approved for use. If we have a look at the price history of this stock, you can associate the movements to this timeline of events. Firstly, you can see price rallying in November 2019. This is when AQST first submitted the application for Libervant. However, in September 2020, the FDA issued a CRL. Now, a CRL is bad news because it means the FDA do not approve the drug in its current form. And you can see how price collapsed following this news. Earlier this year, AQST resubmitted in June their application, and the prospects of the FDA approving it now is beginning to get priced into the stock, especially as you can see price broke above the 200-day. In the short term, price is likely to cool off after the impressive run it's had. Price may even go back to retest the 200-day around 436, but 505 is also solid support. This stock has significant key event risk. However, with risk comes reward. So if the FDA do approve the drug, the first key resistance level will be around 8, and you can see 8 is the area where this stock has really been stuck, and it needs a trigger to break above, and that trigger could well be the FDA approving Libervant, and we could really see this stock take off, and then 15 to 18 can become a real reality. AQST has also received 2 broker updates recently, and you can see their price targets ranging from anywhere between $14 to $30. But the key for this stock will be that FDA decision on the 23rd of December. That will determine the future trajectory of the stock. So that's one to watch. Next up is NIO. Now, NIO reported earnings on the 9th of November, and it missed analysts' expectations, coming in with a loss of 28 cents per share when analysts were looking for a loss of 10 cents. And you can see here in the daily chart, price retesting that key trend on earnings. However, price held and had another run at the 200-day moving average. Today, however, is where price is breaking below that key trend line. So it's nothing to do with the miss on earnings because it's happening way after the event. The only catalyst for this today looks to be Alibaba reporting its earnings that also missed expectations. NIO looks to have been caught up in this negative momentum as Chinese ADRs once again come under pressure. And here is a chart showing the correlation between Alibaba and NIO. The key for NIO is whether it can shrug off this negativity around Alibaba's earnings and close the week back above that key trendline support. And to finish off, a quick update on Fubo TV. Now, Fubo has been crushed since earnings, with momentum changing dramatically. The gap down, as you can see in the daily chart here, after earnings missed on EPS, has seen price remain below the 200-day. Now, I covered Fubo a couple of weeks ago and mentioned the level of short interest in the stock and how hedge funds love to hate this stock. Well, the earnings miss will only have inspired funds to add to short positions, and this is why price remains weak and under pressure. In terms of the key highlights from earnings, subscriber additions, you can see Fubo continued to improve that with subscribers hitting 945k, and that's up from 682k, so that's a positive. However, the key to the reaction to the earnings report is this slide. Have a look at adjusted EBITDA. Now, EBITDA is earnings before interest, tax, depreciation, and amortization, and you can see EBITDA increased in terms of the loss from $47.5 million, $81.3 million in this latest quarter. The net loss itself actually shrank from $274.1 million to $105.9 million, but it's really the EBITDA increase that must have shaken up investors, and funds continue to add to shorts here. Now, what was the reason behind that? Well, if we drill further into the numbers, you can see this impairment of intangible assets. That's what really helped bring EBITDA down from a year ago. And that basically is a write-off to brand names or goodwill. That's what intangible assets are. So for me personally, that impairment of intangible assets artificially reduced the adjusted EBITDA a year ago. Because we didn't have that this year, the EBITDA was going to be higher. However, price is now extremely oversold on the daily time frame, and a bounce is likely here. The key support level for the stock is around 22.60. If it can close above that, that would be a first step in terms of a sign of any recovery in the stock. However, as long as the stock stays below the 200-day, the momentum remains with the bears. With that said, that's my weekly update. Remember to hit that subscribe button so you don't miss any future content. And if you do have any requests that you want me to look at, just like I did for AQST, drop it in the comment section and I'll have a look at that in future videos. Thanks again, and I'll see you at the next one.